This region around the Great Lakes has been called a heartland. When it comes to agriculture, there's hardly an area in the world that compares.
Everybody, just hold on. I don't know what we're going to have here.
There's a lot of self-proclaimed geniuses out there that know the national yield, but they're all wrong.
Manage money, piling in.
Double digits higher.
So at this point, we're in kind of uncharted territory.
There's a lot of money on the sidelines.
So that was a crazy one.
That's what brings the viewers back. That a boy.
Good morning, everybody. It's Thursday, May 14th, and this is the AgYield War Room. Dan Dempsey, and I'll be moderating today's session. As always, if you get any questions or comments, please feel free to drop us a line in the chat area, and be sure to get to it during the show. Overnight markets here, July corn down 8 at 472 3/4. July soybeans are down 30.5 at 1198.5. And July Chicago wheat was down 8 3/4 at 666 3/4. This morning we had an export sales announcement, 252,000 soybeans to unknown destinations. 120,000 of that balance was for 25, and 132,000, the remaining balance for 26. We got weekly export sales out here this morning. Pretty poor across the board. Corn, 684,800 for old crop. A million was the low end of the range there. Just 400 for new crop. 400, not 400,000. On the soybean side, 102,100 for old crop. That was low end of the range, and 80,800 for new crop. On the wheat side, 133,500 for old crop. 221,100 for the new crop there. Old crop meal sales were solid. 344,200, 3,500 for new crop, and we had net cancellations of 600 on the oil side for old crop. We will get notebook crush out tomorrow. That'll be out at 11 o'clock Central. They're looking for an estimate of about 214.03 million crush for April there. So with that, guys, let's kick off the morning. Obviously, front of everybody's mind here, Trump and Xi met overnight there. Very little news leaking out here as it pertains to ag. A little bit in the beef complex. We'll talk about that later with Ryland. But overall, relations seem positive. But if you were looking for something mind-boggling or mind-blowing here on our side, it doesn't feel like it. So, Justin, I think we kick it off with you here this morning for your initial thoughts, and then we'll throw around the room.
Yep. Sorry, mute button. Yeah, I mean, I think we kind of talked about it yesterday. It just markets got pumped up pretty hard going into this meeting, into this time frame. Commitment of traders were loaded up in the bean complex, were record long, corn, basically beans, meal, oil. We had a bullish wheat report, so you probably ran out whatever shorts were left in that, that sector. And we're going into a big meeting, and I honestly don't know what the market is or was anticipating. So I just think we were vulnerable. We got good weather coming our way, all the things we've been talking about. I just think we got overcooked for today's date, and I think there's risk. Risk for a while. It's good. I think you have to keep feeding this kind of market, this kind of open interest, these kind of fresh longs. You're going to have to keep pumping bullish information to hold these levels or go higher. And I think we're in a really tough time of year to do that. So again, you don't know what's going to come out of these meetings. Obviously the market's not liking whatever it's heard so far. Bean complex, for example, I don't know what they can say that's going to make old crop beans bullish personally. We're uncompetitive, sales suck. You saw that. We're not competitive anymore. Corn's the closest to it, but we're obviously ran high enough up now that we're not even doing business there. So soybean meal is the one that was decent. We saw big open interest, big, new highs for the move, basically in meal. I personally think that's even just an unwind of the meal oil relationship. Oil share, at all-time record highs. So the whole bean complex looks fishy to me. Unless we have a big weather problem. It's just oversupplied globally, and China demand's stagnant. I think they've got we've talked about this for a long time on the show too. Demographically, they're hurting. Their economy's struggling. Their big protein demand growth year over year. That story's, I think, over and probably closer to the declining phase. So to go do a big deal where you force them to buy more beans when you've got South America that's increased by 50 million tons in the last few years, I just think is a really tough order. And even if you get it done, it's a short-term thing, in my opinion. So I'm not not to be a Debbie Downer. I just think we're just having a correction on something that's been way overcooked.
Yeah. Well, and I the beauty of this show is that you can go watch the last 500-600 episodes and see what we've talked about. So it's not like we're cherry picking here by any means, but you said it yesterday. You take 17 of the top CEOs in the world. And if you're a huge long in the bean market, what did you expect overnight? Because you know what I mean? It felt like there was a little blip where it said, you know what, we'd like you to buy the beans. That's what.
Well, there was a whole bunch of rhetoric, the Cargill CEO's going there, there's going to be this big deal. Well, Cargill could care less if they're selling you beans from South America or US.
Right.
I mean, they're we talked about yesterday, like okay, so hopefully they do a big deal with the US so they can get a $2 arbitrage from their South American supplies.
Right.
So again, who knows? We could close higher today. I mean, these markets are there's huge money moving around. I just think when you look at how loaded up the bean complex is, and really look at all of them. I mean, we're just loaded up in general, long, and you're going into good weather, all these kinds of things. I just think it's going to be hard to get rewarded in the near term. Obviously we got a lot of weather ahead of us. We've got to grow a crop. We've got to do a lot of things to, turn this into a bear market. But in the short run, I just think there's a lot of vulnerabilities. So
very good.
My take.
Dustin, what's on your mind this morning as you look at everything?
Yeah, I think there's a lot of hype going into this, and that is a bit of a concern. The fact that we're really on no news and we're down 30 cents in the first night after the opening. It's like that's definitely shows that there may have been some emotional buying going into this, and we'll see. This is overnight price discovery the best price discovery. We'll see how today trades. I mean, it's hard to say. It's a little suspect to see it down 30 on no news, but we've seen crazier things in the soybean market when there's a lot of hype and maybe they were expecting something way more serious and concrete to come out of this in the first day. It still could, we still could see some announcements in the next 24 hours, but I worry if all we get is 25 million metric tons confirmation that we'll be buying, which would be surprising because we've seen Trump try to negotiate for more, but that would probably be a bearish outcome, I would think, just because the market's, I think, been overhyping this. The other thing, I think, Ben, kind of brought this up yesterday to me too, and I think this is a really well understated thing. There was a pretty big drop in the Brazilian real. So if we go and do a big deal with China, and we still have to compete with Brazil on some level, for the rest of the beans that are not going to China, and they have bigger and bigger crops every year, right? More acres. If for some reason the currency tailwind that we've been experiencing the last 6 months starts to turn, which yesterday it did turn a little bit, that would be the other concern I would have for bean pricing. So really watch the real and see how that performs over the next few weeks.
Very good, Ben. What's going on your way here this morning?
I would be impressed with grains if they can hold their recent lows. The 83 in December and 63 in July. We talked yesterday about one of the hardest things to trade is the inflationary trade, which would be, directly a result of what's going on in the Straits. But it's such a hard thing to hang your hat on for a trade because we've really only seen one of those in the last, 18 years, 19 years. I mean, COVID was just pent up demand and some inflation. So I think it's a test. We're in that window where you can really shake the tree in grains. There's a lot of longs, and they're going to have to make a decision here in the next, call it 30, 40 days on whether or not they're going to want to roll or not and stay in these markets. And that comes with a cost. So unlike the short who can stay in there and improve their position, the long has got to pay a toll. So as long as spreads are at a carry, they pay a toll. So I'm just kind of, I'm kind of open-minded here. I personally wouldn't mind a big tree shaker break, especially if it happened before we got to the gut slot of, the weather, because I do think that we can latch onto something weather-wise if it were to materialize. But, really interested to see how grains play out the week here. Is this an inflationary trade, or were we trading relatively competitive cash values? Maybe in corn, I'm not sure about. I don't think so in soybeans. So we'll see. That if for some reason we come out of this and we see some movement in the Strait of Hormuz, I think that grains are pretty vulnerable just this time of the year, loaded up long. And we took away, as we see it now, the verbiage was something of a spirit of cooperation on trade, which is not giving people what they want. And so we kind of have that one out of the way. And then where can we go with the Strait of Hormuz if there was leverage in China to get that open back up? And I think that'll be paramount to what our fall looks like if Southern Hemisphere producers have a hard time getting any fertilizer, fuel, etc. So this is kind of the first domino, and we'll see what happens. The Strait may drag out for a while. So
very good. One thing I wanted to point out too, quietly yesterday, the House passed the legislation to allow year-round E15. Passed on a 218 to 203 vote. It now goes to the Senate, which is going to be hotly contested. You're going to have the oil lobbies. You're going to have all the different groups arguing about the economics behind it. But interestingly enough, is that would generally be pretty big news, but it takes a back seat with everything we got going on. But at least that has progressed through one side of the aisle. So we'll see what happens there. Rylan, let's move to livestock really quick. Like everything else, pretty clear as mud regarding export licenses with China. Yesterday, they were renewed. This morning, the websites had them expired. So everybody is guessing on whether or not they are renewed or not. Hogs had a pretty good performance yesterday as well. So why don't you give us a little insight as we start the day?
Yeah, I think just overall the news definitely, I mean, I don't know if there's a glitch on the website or something, but it seems like multiple outlets have just been reporting that these were renewed. So I don't know, a little bit of confusion here. So it's hard to say what the market's really going to run with. But I mean, obviously China's been relatively absent from the beef market for the past several years. I mean, this is coming off a record amount of purchases back in 2022. So it'd be really nice to see. It just seems like it conflicts with some of the agenda that we've been seeing from the administration, trying desperately to get beef prices lower for the American consumer. So having China swoop in here, and potentially buy up to 200,000 metric tons of beef a year, probably not going to break the price as much as we would like. So, more details I think need to come out about this, commitments, maybe some hints at tonnage and what the expectation is, because right now it just still feels like we're flying a little bit blind here. But I mean, overall good news for the complex itself. I mean, price action in the cash market has been on fire lately as well. So, you got 263 to 264 trade, up $6 to $7 from the previous week for cash. So, I mean, overall, the cash market just is not backing down. So, I mean, futures market got a nice little boost, looked like it was trying to reverse here. But obviously, cash is going to be kind of in the forefront, I think, after this news kind of gets traded here on the open. So we'll see what that does to us and what the reality is in the situation going forward. On the hog side of things, yeah, it was a nice little reversal. Finally didn't make a new low for the move and actually closed with triple-digit gains. Saw open interest kind of popping up here. So I don't know if that was just a bit of optimism before this China meeting. Pork was never really anything on the menu, no pun intended, from what I understood.
That's
So,
horrible.
I mean, well. But no, June made the highest level in 10 days. So, I mean, you're starting to see a little bit of cash movement here, cash up 32. Still need to see the market actually break through this 25-day moving average, I think, to really get some more technical support here. Otherwise, just feels like carcass up just a little bit, cash up 32. Maybe there's going to be a little bit more follow-through support today, but still would like to see us close over those numbers and see cash continue to creep up here.
Very good. Appreciate the update there, right? Just came into the open. We got July corn down 8 3/4 at 472 right now. July soybeans are down 31 at 1198. And July Chicago wheat is down 10 1/4 at 665 1/2. Tomorrow's Friday will be Fun Fact Friday, so be sure to tune in. You never know what Brian's going to cook up there, so be sure to check it out. Also, War Room Report, check it out as well. We've got the link in the description. Deeper dive into everything that we talk about here every day on the War Room, as well as premium content that we'll put out, reactions to USDA reports and special reports as well. So be sure to check it out. A portion of those proceeds also go directly to support the AgYield NextGen Foundation, which of course puts on our national scholarship competition. We've got 5 wonderful champions that are awarded scholarships, and we will honor them July 27th at the first annual AgYield NextGen Foundation Golf Classic at Royal Country Club. Just a few spots available, so be sure to check that link out. If you need help registering, give us a call. We can get you set up. It's going to be a great day, though. Get to meet and mingle with everybody here at AgYield, as well as the scholarship winners and different industry leaders as well. It's going to be a great day. We appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and subscribe. We're doing this every day that the markets are open on X, Facebook Live, and YouTube Live at 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a great day. We'll talk to you again tomorrow.
The War Room is presented by AgYield, a risk management partner of American grain farmers for over 50 years. Looking for more in-depth analysis? Check out the War Room Report. Our team's knowledge and expertise delivered straight to your inbox every weekday. Each report delivers key market-moving headlines, critical weather updates, USDA report breakdowns, and exclusive video content. All for $50 a month. And most importantly, 10% of every subscription will go directly to support the AgYield NextGen Foundation, a nonprofit investing in agricultural education and the future of farming. To sign up for the War Room Report, check out the link in the description or learn more at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.